To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. Good morning, AJ. How are you?
I'm good. I'm tired. There's been a lot happening in the markets. You can tell I've got the 5 o'clock shadow. I've got the ball cap on.
Yeah,
I've been looking at the markets all morning and all last evening. We had a big thing happen yesterday with the close below our 100% retracement. We'll talk about that today.
well, let's dig into it because you're right. The past few weeks, at least in July, right, we've been we haven't had any moves to the upside, to the downside. We've been staggering, and even just over the last 2 or 3 days, even yesterday, we had a huge sell-off. Is this being driven by anything specific?
Well, I think it's being driven by the lack of solid future planning, shall we say. People are going to point to what's happening in China. There was a lot of news, especially in the beginning of the week. China missed pretty much all of their targets. Now, as much as, especially in mainstream media, we like to say that, we're at conflict with China. We're also very much economically entangled with China. So if we have here in the United States and even on this side of the world, United States, Canada, Mexico, if there's any sort of disturbance here, they feel it. And if there's any economic disturbance there, we feel it. We're just that intertwined as world trading partners. And so with China missing a lot of their targets on everything from retail sales to economic growth, they're just missing across the board. And then on Wednesday, they really got hammered about their housing issue that's been escalating for a few years now. That's been trickling here. On top of that, we're missing all of our inflation numbers. So we had retail sales on Tuesday. Let me just pull that up really quick and I can show you what I'm talking about. We had retail sales reported on Tuesday. That's this right here. And these numbers were way more than what we expected. So retail sales is heating up when we would expect, with all of the tactics the Fed has taken over the last 18 months, that it would be slowing down. Factoring out vehicles, it's even hotter, right? So is this back to school, or is this just indicative of the fact that no matter what the Fed does, the economy is kind of out of control? Then we come over here and we see the industrial production numbers on Wednesday, also very much out of control. Like they're hot. I like to see these capacity utilization numbers being quite hot, but the industrial production, manufacturing output way higher than expected. So the Fed came back on Wednesday afternoon with their meeting minutes, and they're being very hawkish. They're saying, you may think that we're done raising interest rates, but we're not. So that added to already the kind of sour flavor that the overall investors have had. Then you throw in one more thing, which is Fitch coming in and saying, number one, that they're going to downgrade more U.S. banks for not being prepared for trouble. And number two, wanting to downgrade a lot of the China's sovereign debt. China has debt just like the U.S. does, downgrading their debt so that would make it less possible for people to invest in, or less desirable for people to want to invest in China's debt, basically saying that China might not be able to make good on the interest rates that they promise people. All of this is just becoming, it's a lot of little pieces giving investors a sour sentiment. So investors do what investors do. They're pulling their money out of the market and putting it into bonds.
And when we look at your technical analysis here, right, it does look like it's been the market's been trending up with that bottom blue line there. It looks like we've broken to the downside. And
Mhm.
what would be your analysis of, well, could this continue through the end of the year? Is that the top potentially?
Well, we've been talking about this level at 4,600. When you pull in something like NASDAQ level 4 data, where you can see the number of sell orders that are preparing at different prices, you can see that at 4,600, there's a huge wall of resistance, meaning as soon as we get into that 4,600 range, a lot of folks are going to be cashing out of the market. Folks that got in that, they got in a few, I would say like about 18 months to 2 years ago. They got in thinking that there was no way that the market could turn south on them. And as soon as they got in, we're talking about people that probably should not have been investing in the markets, but there was so much hype and there was so much FOMO, fear of missing out, that people started to throw their money into the markets that they otherwise had in more safe investments. And then sure enough, we know about 18 months ago, the market turned south on them. And so they've been white knuckling it this whole time. And as soon as they can get out without losing their shirt, they're going to. So we see a lot of selling at 4,600. We ran into that level, and I had said on this show, we need to pull back and then gain some real buying momentum to hit that wall with a lot of buying to outweigh all that selling and to get through. So we did start that pullback, and then we overshot it. Last week, we were talking about how we overshot that pullback, and that causes kind of a weakness. And we were challenging this ascending line of support last week. Well, right now, as of yesterday, as of the close in yesterday's market, we closed past this, what we call a 100% retracement line. So that means we closed lower than this reversal from the last time we had a start. What that signifies technically is that that was the end of our uptrend. We had been in an uptrend since our uptrend started on March 6th. That technically, as of yesterday, July 31st, was the end of that uptrend. And these uptrends and downtrends tend to overlap by one micro move here. And so it actually tells us, in retrospect is always nice, hindsight's always nice, but it basically tells us that since the beginning of the summer doldrums, July 7th, that's actually been the beginning of our new downtrend. Now, it takes some time for a trend to mature. And so you can see here, now that I'm looking closer in, you can see here that I've got this level at $4,354.11. Let's just call it 4,355. I'm looking at that level because if we get a close below that level, and right now it looks like today's price action after hours traders, pre-selling traders, or pre-market traders started us lower, but it looks like we're kind of coming back up. So I'm not sure that today will be that day, but if we get a close below this, this will signify for us technicians that we are already starting off on this downtrend on a very strong foot. But yes, it needs to go up and come down a couple of times for us to get a mature downtrend. The great news is for option traders, what we've got here is a great opportunity. While a lot of people are freaking out about their stock positions and about their mutual fund positions and about their pension fund positions, this is like an option seller's dream. We're about to have a windfall. So I'm excited to talk to folks about that. But things are looking a little bit sour in the mainstream market today.
And for anybody that's watching, listening for the first time that doesn't necessarily understand or use options as much, looking at this chart, AJ, the next thing that I would ask you about is the VIX, right? Because that would
Mm-hmm.
be the gauge to say, okay, there is some nervousness. We have this indicator to tell us that the nervousness is increasing, and as premium sellers, when people are more nervous, those premium prices go up, which technically makes our trades a little bit more valuable, more profitable.
That's right. Because what we can do as option traders is put ourselves on the correct side of the equation. So if we see the VIX going up, and so you wanted to bring up the VIX, here it is. I'm going to put it into a candlestick form so people can see that. What you can see is that the VIX has started to step itself up. In fact, it's not that far away from crossing this mean. This is white dotted line is the mean VIX or median price since the beginning of the VIX in the 1980s. So we're talking about almost 40 years worth of average calculations here. So you're seeing it start to come up off of the lows. That basically means that investors are nervous, investors are confused, investors are uncertain. And in response to that, they're starting to buy options in order to hedge their positions, right? Because options lock in buying and selling prices. And so if the underlying symbol that you own goes out of this range of what you expect it to be, the options will kick in and protect that trade. So there's now this growing market for protection in this VIX. You can see people are wanting to buy these things left and right. So what that means is if we put ourselves on the seller side of things, like you said, we're going to get higher premiums than we're used to.
And when I look at this VIX chart and I go back, I don't know, two weeks or so, when we're really under that mean, is that a good representation of the summer doldrums where you're just not getting volatility one way or another? Things are just consolidating, and it's a weird phenomenon. But it seems to be accurate year over year over year that the summer is just slow, and then heading into August, the markets really start to ramp up. And are we really getting the first signs of that this week?
So I don't think we're actually getting the signs of that. So the VIX is more of a representation of, are the traders and investors that are present right now, are they afraid? Are they fearful? It's less of a representation of activity.
Okay.
And so I think what we're seeing here is that there's starting to be the rumblings of some uncertainty. What we were seeing 2 or 3 weeks ago was that push towards new highs, right? We were pushing, and I was mentioning to us a couple weeks ago that, boy, this is kind of a weak ass move towards these highs. I was like, there's no way we're going to break through the highs this way. We're going to need to reload and come at this running. But you have this move up there. Things seem to be good. 2 weeks ago, we didn't think there was going to be any more interest rates hikes this year. We weren't hearing any problems out of China, and so that's what we were seeing in the VIX. In the VIX, you're seeing 2 weeks ago that things were kind of calm. Well, it doesn't take long for people to get stirred up, and that's what we're seeing right here. The question is, will this stirring up mature into something bigger than just a temporary pullback? Like, are we? And I can't tell you yet. We have to see some maturation. We have to see this downtrend mature. What I'm going to be seeing over the next weeks, days, and weeks is you're going to see the width of this downtrend channel change drastically. It's going to get wider and thinner. It's not going to be, a mature channel stays at a very constant width, and it also stays at a very constant angle, right? When it's not mature, when it's brand new, like we have here, we're going to be seeing, swings in this channel. How strong or how weak is it? Meaning, what angle is it going down in price, and also what's the internal volatility of that channel. That's going to be changing, and we're going to have to keep our tabs on that until this matures a little bit further. It may wind up just going sideways. That's really going to be good for us option traders. But if it goes down, that's fine too. We've got strategies to take care of all of that.
That's right. We've got strategies. And with that, let's go ahead and give everybody an opportunity to jump into AJ's daily workshop where he breaks down these strategies in a lot more detail than we do here on the show. But on the show, you're getting glimpses of short positions, long positions, time decay positions, calendar spreads. And so if this is new terminology or something that you're interested in, or if you're worried about the economy, the stock market, then maybe now is the time to get into options and to learn more about them and to start to utilize them in your portfolio. And so we just threw the link to the webinar in the chat. Head on over there and check it out. Otherwise, we are streaming live. So if you do have any questions on specific tickers, I believe today is a good day to get them on the screen so that we can do some analysis and get ourselves up into a position to make some money. Otherwise, AJ's got his pick of the week. We've got some speed round questions, and we're just going to be looking for opportunities to take advantage of this new vibrant market that's starting to show some life and presenting some opportunities. So we'll take a quick break. We'll be right back and we'll dig into that some more.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, we don't necessarily have a trending topic for today, but I am curious to know what your thoughts are on the real estate market, because I'm seeing a lot of statistics coming out that the 30-year mortgage is like the highest in like 20 some odd years or whatnot, but the U.S. housing market isn't necessarily budging. And I'm curious to know whether if we continue to increase rates, if that's going to become an issue, and or can we withstand it, right? I feel like that's something we've talked about the last couple of weeks, this soft landing, and housing is a big component of making that a reality or not.
I mean, housing and the whole, if you think about housing and building houses, there's all related industries: furnitures, appliances, decorating, renovating, stores like Home Depot and Lowe's, whole careers, architects. There's housing is a huge industry in all countries, not just in the US. Looking at the US data that was on Wednesday, you can see that, and by the way, there's been a kind of shortage in supply of housing here in the United States specifically. And what that's been creating is kind of a difficulty, even with cooling, theoretically cooling inflation in other sectors. The housing sector still remains quite hot just because there's a demand for housing that isn't being met by the supply. It's not being balanced out. And so you've got that, and you can see here that the starts that were reported for July came in at expectation, but now you're raising these interest rates. You're making it harder to borrow money. You're making it harder for developers to borrow short-term construction loans in order to build house. What you'll notice here is that the permits number, so starts is when a builder actually starts building houses. So you can see here, that's kind of what the report expected, what the consensus expectation was. But permits is getting ready to build new houses. And you can see that we expected to see about 1.464 million, 20,000 homes under expectation is telling you that, we're making it harder to fill the gaps that's necessary just to keep the people housed. And so housing prices are going to remain high. Again, also with interest rates, not only are housing prices high, but it's harder to borrow money. So in order to get into that house, that American dream, now there's a whole rental market, and the rental markets across the United States are getting crazy. It's just becoming almost impossible for people to figure out how to do the housing. This is a big issue. The opposite is happening in China, right? The opposite is housing. The government got involved in China and subsidized a whole bunch of building in the manufacturing areas of China, moving a whole bunch of people, from the rural areas into cities. And there was a lot of corruption and a lot of lost money, like to the tune of billions, if not trillions of dollars of lost money. People were putting down deposits like $100,000, like individuals, to buy a place that these places have not even been built, or there's no money left to build them. And so it's like in China, it's a real mess when it comes to housing. And the government is perhaps trying to get involved, but maybe the government is being hands off, or maybe, they started a project but didn't finish a project. It's really, housing in any country is something that could really create a downturn all across, no matter what you do. So we got to keep an eye on housing. One last thing, Sip, is I did want to bring up, when we take a look at investor sentiment, let me see if I can get us back to that chart really quick. Investor sentiment is telling us that this next rate on next Fed meeting on September 20th, they don't expect rates to change. I mean, it's getting stronger and stronger, but there's still another rate meeting after that. And so I guess they're trying to figure out, what do we think is going to happen for the November 1st and the December 13 meeting, right? On the November 1st meeting, you're seeing some people are even starting to think that there might be a 0.5 point rate hike. And quite a few people are thinking there'll be a 1/4 point. That's in November. In December, it's almost a given that they're going to do a 0.5 point rate hike. Some people are thinking a 50%, not a 1/4 point, but a 0.5 point. So the sentiment has changed, not for this upcoming September rate hike meeting, but for the last two Fed meetings of the year. Investors are thinking that rates are going to continue to go up.
And is there a number that concerns you in terms of that interest rate? Because I mean, we're creeping up on 6%, right? So I mean, is 7, 8 starting to gonna have some windfall effects and other? I mean, I just think about what happened with the Silicon Valley Bank. I mean, we were at like 4% and they collapsed, and so I'm just thinking.
Well, and there was a small bank in Kansas that actually failed. It's not as reported, but just in the beginning of this week, there was a small bank in Kansas that closed its doors, and depositors couldn't even get their money out. I haven't been following it too closely. I don't know what ultimately happened, but it came across my news feed. So you can see here as well, how the Fed behind the scenes has been selling back bonds, basically shredding a lot of the cash that they put in during the COVID crisis. You can see they're taking a break. Whenever the Fed takes a break selling back bonds, you know that they're a little bit skittish for the moment. So there's definitely uncertainty and confusion, and I think it's running deeper than just investors in the stock market. I think even the Fed, shown here, these are some of those kind of secret reports that are available to everybody, but not many people really understand how to interpret them. I think this is a tell that even the Fed is a little bit concerned about what's happened in just the last, say, 5 to 10 days.
Well, fortunately for us, whether the market goes up, sideways, doesn't move at all, we've got strategies to take advantage of it, to
That's absolutely
protect
right.
the portfolio, to take advantage of whatever is happening in the world. And so, with that being said, let's dig into some examples. Let's go over some strategies. Let's take a glimpse at what's piquing your interest. And this week, your pick of the week is ticker symbol PFE. Is that Pfizer?
Yeah.
Pfizer. Look at that.
Yeah. So, first of all, I want to emphasize exactly what you just said, and that is there's the overall broad market, there's the overall economy, right? That's what we spent the first half of this program kind of thinking about. But then there's us, right? And one of the reasons why I got into options trading myself is because I learned that with different option strategies and the way that you populate these option strategies with different options, you can basically take any situation and turn it into a portfolio profiting situation. You just have to make sure you understand what patterns you're seeing and then apply the right option strategy to it. So as far as our personal portfolios are going, thanks to some of these hidden indicators we use that give us a clearer picture of what's really happening, we can now take strategic decisions and keep that profiting. Pfizer is one of these companies that I would call a defensive type stock. So I think that we're going to see challenges over the next couple of months in technology. And then possibly following technology, I look at things like financials, which I think might be under some pressure as well, and probably some healthcare, which Pfizer, you can kind of say that Pfizer is part of all these, but Pfizer is a maker of both generic as well as name brand drugs. If anything, people are taking more drugs than they've ever taken. Pfizer is one of these companies that you can see in their earnings announcements, $1.23, 67 cents per share on just a $35 stock. These are fantastic earnings results, and they're doing a dividend, which means they're taking a lot of their profits and giving it back to their investors. 41 cents per quarter. That's a hefty dividend. I like this type of stock for me to be able to sell premium against. Now, if I go back a little bit and I look over, say, for instance, the last 2 years, yeah, Pfizer has been hit with a little bit of sell-off, but it looks like they're bottomed again. And so I think we can actually turn this into some trades. It looks like we've hit a bottom somewhere around 35, 35.50. And I'm looking to challenge that bottom somewhere around 37, 37.50. Now, this is a tight channel, so you're going to have to be a little bit more on the ball. If it goes higher than that, that's fine. I don't want to do any trading today, SIP. I want to look for that a top gets found. So I'm going to let this current little move that's been going on for the last couple of days, I'm going to let that play out. But once I hit whatever top I hit, and I don't care where it comes, whether it's 37.50 or 38, 39, 40, wherever it hits that top, I think that what I'm going to do is I'm going to be calling out for folks to either short some Pfizer. That means selling first and then buying back at a later date, selling at a high price, buying back at a lower price. When you short a stock like that, you make money when the stock goes down. Either shorting Pfizer, or I can see buying a deep in the money, far out in time put option, which will have the same effect as shorting Pfizer. So that would profit as Pfizer drops back down. And then once Pfizer finds its bottom, what I think I'd do is I would then sell some put premium and buy some protective calls and start that income generating process. That's one thing. if I had Pfizer stock right now, if I owned Pfizer stock right now, I don't think that I would. I think that I would wait and possibly sell some call premium. So I think I can turn this into a premium trade. In fact, I'm very confident about it. And it's beautiful because Pfizer has a really active options chain. You can see here the gold standard is looking at the bid-ask spread. This gives us a direct kind of understanding of what the market makers think is going on. If there's activity, there's only like a 5 to 6 cent at the money bid-ask spread on both the put. On the call, it's even less. It's a penny. So people are definitely in there trading the options on Pfizer. I really think that if we get our signals to determine what's a top or a bottom, Pfizer should be on our hot list. We should have a trade plan in place. We should have signals that we're watching every evening and every trading day, and going forward with a trade on Pfizer.
So follow-up question. When you expand the Pfizer stock over like 2 or 3 years,
Mhm.
we're seeing that it's in a pretty cheap price now. And so with this
Mhm.
longer type of holding the stock, selling the premium month over month, is that something that you're not necessarily positioning yourself for, but knowing that it's a discretionary name that has some consistency in an economic downturn, a name like Pfizer can start to gain some traction back to the positive side?
It could. I'm not actually banking on that. I feel like Pfizer is one of those bigger companies that we've talked about correlation in the past, where it doesn't matter how well the company is doing, that it's the sector or even the overall broad market that's going to affect its price. And I feel like Pfizer is going to have a lot of pressure from its sector and from the broad market. So whether I'm long or short for that initial position, I don't think it's going to matter in the next 5 to 6 months. Um, I actually think it's better moneymaker for us if we set up one or the other initial covering positions at one of the extremes. And so, since we're working up this little mini channel these past few days, I think it's best for us to target getting in at as high as we can right now. And so, in that case, we would short Pfizer. And then that would give us the ability to sell option premium and create that monthly or even weekly, if you decide to sell weekly options, income stream off of that Pfizer initial position. I'm not so worried about Pfizer actually, or I'm not forecasting whether Pfizer should be a good long-term hold or a good long-term sell. I'm just mainly setting up a position to create those income trades.
Sure. And I was just kind of referencing that 3-year chart where it's like, yeah, it's kind of down there. So, it could make its way back up. All right, AJ,
It could, but I'm not sure that we're actually getting a signal that it will.
and you're the pro, and we'll take your word for it. That's the Pfizer trade, ticker symbol PFE. AJ's got an eye on it. He's got it on the hot list. He's going to be keeping seeing if any signals develop. Otherwise, we've got a few more names to run through in our speed round. And so let's head on over to my hometown. And this is John in Chicago, Illinois, who's interested in a tech name, Marvell Technology, MRVL. I know the tech's been getting hit hard this week.
Yeah. Marvel is coming up on an earnings play. So August 24th, they'll be reporting earnings, and they'll be reporting earnings after the market close. So I look back at previous earnings. So you can see over here the earnings where it was on, what day was this? This was on May 25th. You can see the market reacted quite aggressively. Over here, you can see on March 2nd, the market kind of just went ho-hum. If I go back and look at a few more, I come over here, the market acted ho-hum. I come over here to the one that was about at the same time last year. The market reacted kind of aggressively. So I'm not going to suggest that we do the earnings play that I've been talking about these past couple of weeks when we were in the heat of the earnings season, which was to do a calendar spread, because the calendar spread really relies sort of heavily on the underlying symbol, not like investors not really reacting too aggressively to whatever the earnings announcement is. So I don't know if that would be a strategy I'd want to use here in this upcoming days with this earnings, because I can't get a read on whether investors blow off earnings or if investors react to them. It's kind of a mix. If you've been following Marvell Technology, this is John. If you've been following them closely and you're very familiar with the company, you're familiar with the stock, you've been following it and you have a better sense of that, an earnings play might be in hand here. You could definitely try a straddle or strangle. As far as premium trade goes, I like this setup as a premium trade. I want to wait until that earnings is behind me so that doesn't derail my premium trade. But I am at the bottom of the channel. And so I could see myself totally wanting to buy either some Marvell Technology stock around now or shortly after earnings is released next week. I could see myself either buying some of this Marvell stock in lots of 100 shares or buying a deep in the money, far out in time call option, which would act like the stock. One of the reasons why I might go for the stock, it's a little bit expensive, is because they do offer a dividend. So that's just an extra quarterly, income booster there. But once I have the stock, I can then start the process of selling call premium off of that and rolling out protective puts, which is another source of income. And so I can see doing quite a few different strategies on Marvell Technology. My number one check is, do we have a lot of people trading it? I'm going to go out to our January option. I see it's trading every $2.50. And I do see that there's a lot of people in there trading this particular symbol. So it passes all my tests. In fact, I think John might even be part of our program, SIP, because we had Marvell thrown in the mix yesterday during our premium selling workshop where my paid subscribers and I get together and actually do a trade. And it just missed being selected as the pick that we would plan out and trade. And so I think that John's part of our program. So John kind of got, with our little talk today, kind of got some insights on how to trade this.
Yeah, just looking at that chart, that's a crazy gap up whenever that was, but you don't usually see them that wide.
There must have been something that was said or some sort of expectation that was surpassed. That's why earnings can be a very speculative time in order to trade strategies. It's almost like a crapshoot.
Which is why your strategy bets on the excitement, not necessarily the verdict. And
that's correct.
And if you want to check that out specifically, head on over to the YouTube. I know we have a video there that goes over it. So thank you, John, for bringing that one up. We'll keep the party rolling. Heading up back to the East Coast. This is Ted in Trenton, New Jersey. Interested in a financial name, Morgan Stanley, ticker symbol MS. You mentioned financials might be getting some pressure. What are your thoughts on MS?
Well, I think Morgan Stanley is one of those bigger brokerage and banking firms that is under a little bit more scrutiny. So I would say that, these bigger companies are a safer bet. They make profits. They make actually pretty good profits, and they give healthy profits back to their investors. I wouldn't mind owning some Morgan Stanley stock just to make the dividend. One with that said, this also looks like a great stock in order to sell premium on. I have to point out that it's pricey. And so it's probably going to, when you factor in the risk associated, even in the premium trade, if you factor in the risk, and what we like to do is we like to calculate the risk of what's the worst case scenario that could be out there. And so we would calculate what's the most we could lose on Morgan Stanley, and we would define that worst case scenario and build that into our plan so that when we actually traded this, we knew what the boundaries of would be for usually price targets for creating that worst trade, and we'd strive to beat those price targets so that we wouldn't get there. But we always plan around that. And when you plan around something that's more expensive, something more expensive, when it drops the same 5% that something more cheaper would drop 5%, it means that you could lose a bigger chunk of money. So I suspect that when we plan this trade out, you might find that if your portfolio is under a couple of tens of thousands of dollars, I think you'd probably have to have 30 to 50 grand in order to trade this in your portfolio. So something to keep in mind. But it looks like a very healthy position to trade. It looks like we're about to find a bottom, which is the perfect opportunity to either buy some of this stock or buy the cheaper back month deep in the money call option, and then allow that to appreciate as the price works its way up. And if the price works its way up and then reverses before it breaks through, in other words, it continues with this sideways channel somewhere between 85 and, 96, then you just sell premium. That's our big thing here. And the VIX is high. I bet if you looked at the implied volatilities on the banking sector or the implied volatilities on Morgan Stanley itself, you'll see that the VIX is going up. That means when you do sell that premium, the amounts we're going to be getting in the next months are going to be higher than we usually suspect. So this is great. We put ourselves on the correct side of the equation. If people are buying options, if there's a demand for options, we should be in the seat of selling that to them and getting top dollar.
That's right. I think the only risk here is, well, not the only, but one of the bigger ones is that it is more on the expensive side. And so you got to have a portfolio. But that doesn't mean that there aren't similar opportunities in other names. That's why we have the show. If you head on over to the YouTube, we've got a couple examples of some cheaper priced stocks with similar setups, similar strategies. So it's really just dependent on what kind of portfolio you're working with.
You really want to limit your loss, right? People, they're like, oh, they overextend themselves and they'll have a loss, like they'll lose 50% of their portfolio. When you lose 50% of your portfolio, what you're left with, if you think about it, you're not just trying to gain back that 50%. You actually have to double your remaining portfolio just to get you back to status quo. The people in my program, we tend to limit our trades to no more than 4% of our portfolio. So the risk appetite that if it's more than 4%, all of the planning tools that we have at Trading Trainer that we give our program participants bomb out. They basically say, you're taking on too much risk in this trade. Don't do this trade. So 4% is our actual max, and most of us traders are at 2%. That means we would have to have 50 trades go to the worst case possible scenario in a row to wipe out our portfolio. And I usually tell my traders that if they have 3 in a row that go to the worst case, right? Stop what you're doing, because it's obviously not the market throwing you a curveball. It's something that you're doing wrong. You shouldn't have that. You shouldn't have your candidates. If you're following your trade plan and you're planning out your trade correctly, you should never really have a candidate go to its worst case scenario very often.
Yeah, and that's how you stay in the game for 20 plus years, is sticking to the rules and having a system. All right. Thank you, Ted, for Morgan Stanley. Moving on to our last name in the speed round. This is in the energy sector. Baron from down south, Houston, Texas, interested in Devon Energy, ticker symbol DVN. Is this on the cheaper side? This ticker price? What?
I mean, generally, if you want to have a candidate that we can sell premium against with no thoughts in the world, you're targeting somewhere in the $20 or less range, $10 to $20, maybe $25. So this is still a little bit more expensive. This is in the $40 to $50 range, but we could work with it. Let's see what we've got here. First of all, I look to see if we've got a pattern. So we do have some sideways trading here. Little bit of gapping on earnings, not as big as what we just got through seeing on Marvel, but a little bit of gapping over here. You can see there was a little bit of gapping on earnings. They do give a dividend. They are making money. I mean, for probably the medium term, energy, fossil fuels are still running the world. So I think that they've got at least in the next 5 to 10 years, they've got a future. So yeah, I could see trading this. Let's check out the option chain. Let's make sure that there's people trading these. I see that there's granularity every $2 to $3. Not bad, not bad. You can see over here when you look at the bid and the ask price, 15 cents, 20 cents, 15 cents, 10 cents on this side, which is the puts, 10 cents over here, 5 cents over here, 9 cents. So you definitely have a market, which is good because we want to make sure if we're going to use options and option strategies that you actually have other people who want to play with you, trade with you. So yeah, price is coming down. I would look for it. It's a little bit too late to get into an initial covering position on the high side. So I would wait till it bottoms. And once it bottoms, I'd buy either the stock or the back month deep in the money option. And then start the process of selling premium. This looks like it's in this nice sideways channel here. Started there somewhere around March. So I would just take advantage of, profiting off of every time this Devon Energy goes sideways and does another chop.
Yeah, when I think of energy now, I'm thinking about this hurricane that's going to be affecting
I was going to ask you
the
if you're
West Coast.
prepping.
Yeah,
Are you prepping, buddy?
I'm not close enough to the ocean to actually be worried, in my opinion. So not really, but it's going to be a first for around here, at least in like the last almost 90 years or something.
I was gonna say we get where our beach house is on the coast of South Carolina. We have to deal with that 3 or 4 times a year. But you guys are more prepared for earthquakes and now forest fires than stuff like this.
Yeah, so I don't know if it's going to have an effect on any of the energy names, but we'll see. Come next week, it's supposed to hit landfall. I think Sunday evening, so we'll keep an eye on it.
I got some friends down in San Diego. I think they need to keep their eyes peeled.
Yeah, well, it's going to hit them first and kind of work its way up. All right, that one was Baron from Houston, Texas. Thank you, Baron. Real quick, before we start to close the show out, if you've enjoyed what we've been talking about, if you're interested in learning more, if you're concerned that you don't have the time or you don't, necessarily want to, put in the work so much at yourself, but you want to work with somebody, AJ's got a wonderful one-on-one training program that we've been getting rave reviews about the entire year. And so I just threw the link to that in the chat. So if that's something that you're interested in learning more about, one-on-one coaching, having someone there to guide you through this learning process, through going through your portfolio, finding winners, head on over there, check that out. There are a few seats available. And so there's our offering to you. Otherwise, if you've been following the show, if you haven't been following the show, we highly encourage that you do. So hit that like, hit that follow, hit that subscribe button, tell your friends. AJ, we're heading out of, we're mid-August, heading into September. What should we be keeping an eye on, next week, the week after? Anything that's really sticking out for you?
I mean, right now, the VIX is going up. The individual implied volatilities of near-term options is going up. If you have not taken a moment to learn how to do premium trading, that's what I would do. For anybody who's just looky-looing into our show, this is going to be for the next, if not months, next few weeks, but it's looking like it's going to shape up to be maybe the next months, even the next year from now until next summer. It looks like premium selling is going to be the main profiting. And if you're just trading stocks, if you're one of those traditional traders who just goes long or short, or you think you're an options trader, but the extent of your options is finding stock patterns and then using stock substitutes, we call them option substitutes for stocks. If that's the extent of your option trading, I think you're going to find yourself white knuckling a lot of these trades, because it's going to become quite a hit or miss when it comes to trying to predict the direction of the stock. If you wanted to delve in a little bit, options are a great way to profit on this kind of market that I think we're going to be seeing for the next year, which is going to be sideways choppy, just kind of loitering around these levels as people try to figure out what's going on. This is where, if you position yourself on the right side of the equation, so if people are buying options, make it so that you're selling options. That's how you're going to be able to weather this, and weather it in a way where you're not always stressed about, did I just invest in the right trade or not?
And if you are concerned, we've got the webinar that's got a lot of information. We've got the one-on-one.
Coaching is really, you weren't lying, Sip. We are having such good compliments about the folks that are in our program that are getting handheld. They're like, they basically feel like we've given them a new leash on freedom.
Yeah, so let me just put the link up to that one more time, just so everyone can see it for the one-on-one. Otherwise, just tune into the show, because every week we'll get AJ's pick of the week. We'll go through our speed round, and we'll try and find some opportunities. But if you're looking for a little bit more information, then it's time to become a member of the community. Get that one-on-one coaching. Check out that webinar. But that's all I got for the show. AJ, any exciting weekend plans?
No, I think I'm going to be sitting down trying to figure out, yesterday with that drop below that 100% retracement on the S&P 500, it kind of changes our forecast. So I'm going to be in a recalibration phase this weekend. Other than that, as far as around here, it's nice weather. I think we're going to try to play a little bit with the little one and just take it easy as we get, like you said, a lot of the kids are starting to go back to school. Bigger kids are going off to college. We're just getting settled.
Yeah, football's back. I love football season. So hopefully everyone's watching their teams this weekend, hanging out with the family, doing a little bit of homework. Otherwise, relax, set yourself up for success next week. All right, AJ, thank you for your time today. Everybody, thank you for tuning in. We appreciate it. As I mentioned earlier, if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button, and we'll catch you guys next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.